Patrick Ty, I'm an analyst at Gibson Shipbrokers in London.
Pat, a lively session at the breakfast briefing, and inevitably Iran loomed large in discussions.
Yes, it always seems to be one of the favourites there, and it's a topic which is I've followed quite closely over a number of years. So it's always good to get a question on Iran because I think I know the answers.
And in fact, one of them said, Pat, there's no point doing business there because the banks won't touch it.
Yeah, that's quite correct. I mean, again, it's a question that we're asked about the finance side, etc. And the other issue, of course, is being insurance. So it's still quite an issue. But as I mentioned, deals are being done, but they're being paid in other currencies. Remember, too, that India has actually been buying oil from Iran for a number of years, and they've been paying rupee.
It's very hard to decouple any discussion around Iran from OPEC.
Yes, of course. Obviously, OPEC is trying to put more pressure on Iran to, let's say, to move back to their production levels in January is really very unrealistic. So I think that's going to be a no-no. I mean, Iran desperately needs to export more. They want traction with the rest of the world, but it still remains to be quite difficult.
And I understand there's been a change of administration in the US. It's passed most people by, but of course there are a number of questions around Trump and the implications of his election.
Well, I'm not sure. I think Iran will. I think the USA will be a little bit more closed in terms of. I know we talk about physical walls, etc., etc. But I think one of the problems that Obama had was that he had very limited powers because he didn't have control of Congress or the Senate. So now we have a president who will have actually more powers. So it's going to be quite interesting to see how that develops. In terms of what his policies are on terms of the oil market, exports going further down the line. I mean, the US will, I'm sure, continue to export, and I think ultimately they will start to export crude oil. Yeah, I think it's a given.
Some interesting questions also around yards and the potential direction in pricing.
Well, I feel it's not my own particular area of expertise, but what I've actually seen and what I talk about with our sale and purchase department is that I think we're starting to see a bottoming out of the prices. How low can you go? They're already laying off people. They're losing experienced staff. Ships are actually being delayed because they can't get the people to finish some of the jobs. There is going to be more consolidation in shipyards. I see that China is revising their white list of shipyards. So we are going to go through, I think, a fundamental change. Having gone through an area of huge expansion over the last 10 years, I think we will see a considerable fallback in the number of yards. And Japan seems to be surviving relatively unscathed so far.
Finally, my famous or infamous two questions. If this year on a scale of 0 to 10 was a 5 in terms of trading, 10 would be exceptional, 0 would be dire, how do you rate prospects for 2017 and why?
There are a number of influences. I mean, let's give you the figure first of all. I would go for 3 first of all, but I feel that we have got quite a heavy order book coming into the fleet. It's not just the fleet; it's other factors as well. The whole thing really keys on what OPEC's decisions are, whether it's going to be major changes in production or minor tinkering. That, who knows, who's going to forecast? The oil price is always going to have the biggest impact on all of our markets and in fact all of our lives going forward. I think that the oil price will start to move up, but I think very slowly, but I cannot see it reaching in the next 2 years anywhere near $112. I wouldn't want to pin my money on what price I think it will settle at, but certainly nowhere near back up at 112. But I think that's going to be the biggest risk is how quickly the oil price rises. We can absorb probably little costs, etc., etc. So it could be interesting, but it could be rocky as well at the same time.
And finally, Pat, 100 million is in your pocket. You're mandated to invest in the tanker sector. Where are you going to spend it and why?
Well, we spoke about yard prices, etc. And as I say, we have mandatory developments which are going to, in our view, make a lot of tanker tonnage obsolete. So the sound investment, and I still think going long term further forward, is in a VL, and the prices are attractive, and you'll still get change out of your 100 million.